Well, let's turn our attention to the paint space. Indigo Paints, well, that management is on the show right now. They reported a weaker set of numbers. Gross margin compression led to an EBITDA decline, and PAT as well was lower on account of higher depreciation. But the second half of the year could look far better. So let's understand from Mr. Hemant Jalan, the chairman and managing director of the company. Hi, sir. Good morning and good to see you again. Well, the past quarter was a little bit of a dampener. Could you tell us what was the volume growth in the past quarter? And given that there have been a couple of price increases that other industries, other industry participants have told us, how do you see margins pan out for the second half of the year?
Well, as far as volume growth are concerned, we always declare our volume growth numbers and value growth numbers for 4 different sub-segments of the paint industry. And those have been uploaded on the BSE and NSE portals. And you'll find that the volume growth and value growths have been largely in sync with each other, as they have been in previous quarters. As far as the last quarter is concerned, the demand scenario has been extremely subdued. You'll see some large players reporting almost flat top-line growth. Compared to that, I think we have done a little better by almost 7% top-line growth, which is not great. I mean, the demand should bounce back sooner or later. And when that does, we do expect to be back in our trajectory of 20-25% growth at least. As far as contraction in EBITDA is concerned, marginal contraction, we still have a positive overall growth in EBITDA, but the EBITDA percentages have contracted a little bit. And the reason for that is very simple. The industry took a steep price reduction in November and January of last year. And although there have been some price hikes in the previous quarter, they are not enough to negate the effect of the price drop that was taken by the industry about 10 months ago. So that still weighs on the EBITDA margins of almost all paint companies. And the EBITDA margins have shrunk slightly as a result of that, although the absolute EBITDA amounts have increased marginally. And as you correctly pointed out, we did commission a large plant in Tamil Nadu last year in mid-September. And the increased depreciation effect of that, I think that hangover would be over from next quarter onwards, because Q3 of last year, we had the full effect of depreciation of that plant as we would have this year. So the Y&Y effect adversely on PAT margins and PAT amounts would not be visible from next quarter onwards.
So hi, morning. Reema here. I think last quarter you'd spoken about weakness in Kerala, which is a very important market for you. You'd experienced negative growth. How has Kerala performed? And even for the second half of the year, are you hopeful of a recovery? Can we get to at least double-digit revenue growth from the current 7-8%?
So Kerala has definitely bounced back in Q2 from the heavy negative growth that the entire industry experienced in Q1. We at least had small positive growth in Q2 in all the 3 months as far as Kerala was concerned. I understand that the industry is still under stress in Kerala, but relative to them, we have done better and have reported small positive numbers. The problem is the demand slowdown across India. People may attribute various reasons to it, excess monsoon and so on and so forth, elections, etc. But, excess monsoons and delayed monsoon withdrawals have been a phenomena in the past few years also. So I sincerely doubt whether that was the overlying reason. We noticed from the earnings coming out across the consumer sector, not just in paints, that the earnings growth is subdued or in negative territory across all consumer products. And that seems to suggest that there has been some kind of a demand slowdown. Now, people say that because of the good monsoon, we should see a good uptick in rural demand because of, good harvest, etc. We sincerely hope that that happens. Some trends are visible that in October, the money inflow has been fantastic. And that seems to suggest that all the inventory of the dealers has been liquidated. The money inflow was really beyond expectations. And that should augur well for primary sales going forward. So we are hopeful that there will be an uptick in demand. I don't know whether it will bounce back in a binary manner or it will be a gradual bounce back. We just have to wait and see how the demand scenario pans out.
Mr. Jalan, at the half-year mark, you've grown at around 7.5% revenues, taking volumes and value into account. For the year, what kind of a growth will you target? Can you do a double-digit growth? Point number one on revenues. And on the EBITDA aspect, in the margins, you're at around 14.5% to 15% for the first half of the year. How much better can it get?
Okay, so the answer to your first question as to where we would pan out as far as the whole year value growth is concerned, if you can tell me or predict as to what the demand scenario for consumer sector would be in the second half, I can answer that question. But I'm not a macroeconomist to be able to predict the demand trajectory overall. We do hope it will come back because the demand has been subdued in the paint sector for 3 or almost 4 quarters now. So I have never seen such a prolonged demand slowdown. So there would be a lot of pent-up demand which would unleash itself. So yes, for the full year, we are still very, very hopeful. And by the way, the second half accounts for about 62% of our sales. So the weightage of the second half is significantly higher than the first half. So yes, we do expect to come back to at least a double-digit value growth as far as the full year is concerned. Your other question was on, I'm sorry. Your second question, can you just remind me?
Yes, sir. For the first half of the year, you've done around 14.6%. But
yes,
now you've taken price increases and raw material costs should be fairly stable. So what should the outlook be? How much better can it get?
See, if you watch our trajectory in detail for the last 4 years, Q2 is always the weakest quarter as far as EBITDA margins are concerned. It bounces back in Q3 and Q4 traditionally has been the highest EBITDA margin by a very, very wide margin. So last year, we closed at an EBITDA margin for the full year at about 18%. I'm very confident that there will be, for the full year, an EBITDA margin slightly higher than that, which would mean, as expected, a substantial bounce back in EBITDA margins in Q3 and a very high EBITDA number in Q4. That has something to do with the product mix. Typically, the product mix deteriorates a lot in Q2, where exterior painting comes to a halt because of monsoon activity. It picks up substantially in Q3, and Q4 is always the best quarter as far as we are concerned for most of the profitable items. So last year, in fact, if I remember correctly, in Q4, our EBITDA margins were somewhere in the range of 23% or something. And Q4 being the strongest quarter in terms of weightage, it pulls up the EBITDA numbers for the full year very substantially.
Very quickly, sir, is there a possibility that you could team up with someone and try to bid for AkzoNobel if that's on the block? Very quickly.
It's too premature to talk about that. What we know is what you know, and which is what is available in the public domain based on their findings, that they are conducting a strategic review of their business in India. And we have to wait for it to happen. We don't know what they wish to sell and what they wish to keep. And once they decide that, I guess they will make an outreach to whoever they think are the eligible buyers. And if and when an outreach happens to us, we will respond appropriately once we know a little bit more about it. But I think it's
Okay, thank you. Thank you very much, sir, for joining in. That's Indigo Paints, sounding very, very cautious about the tepid demand seen across India. He's never seen such a prolonged slowdown in the industry. But back to